Joining us now is one of India's biggest voices from the banking industry, Keki Mistry. Welcome to the show, Mr. Mistry. Thanks so much for taking the time out. The RBI sounded almost certain that there won't be rate action for the next 12 to 18 odd months. At least that's what we made of the commentary. What's your sense?
Well, I wouldn't put it like that. I would say that everything is going to be data dependent. RBI is going to carefully look at all the data that emerges, whether it is data on inflation, whether it is data on commodity prices globally, whether it is oil prices, whether it is GDP numbers, it is the farm loan waiver and the impact that has, and then take a call on what to do. So I don't think anything is preset or pre-decided for the next 12 months or 18 months, as you put it. I think everything is data dependent. I've been saying for a very long time that we are as close to the bottom of the interest rate cycle as we are likely to get. It does not preclude the possibility of a 0.25% cut in rates over the next few months. But the big bang drop that we saw in lending rates over the last 12 months, I think that very, very clearly is behind us.
Okay, a 25 bips cut is not going to move the needle. And if a 50 basis points cut is out of the question, will the government have to walk the rope alone witut RBI support? Do you sense that growth can happen over the course of the next couple of quarters, or will we have to wait for long?
Rate cuts, well, first of all, rate cuts can never really by themselves move the investment cycle. People start investing in projects not because interest rates are low. They invest in projects because they see demand. So you have to create demand. You have to first thing that has to be done is there is excess capacity that is there in the system. Capacity utilization is about 72-73% from what I've read. And till and until we see that number getting closer to 80 or beyond 80, you're not going to see any big bang private sector investments take place. So initially, it will have to be, the investments will have to be government-led. And then gradually over a period of time, as the capacity utilization in the system increases, private sector investments will also start taking off. So we are not very far away from seeing a pickup in investments, but we are not at the spot where in the next 1 month or 2 months or 3 months, you will see any big pickup in investments. That's my sense.
But is it?
So investments are going to be led not by interest rates, but by demand.
But is it difficult to predict how far is this far away, Mr. Mistry?
I think it's very difficult to time these things. A year ago, people said that we would see investments in 12 to 18 months. We past 12 months, we've not seen that pick up in investments. So it would be futile to give a date. But as far as the growth numbers per se are concerned, I clearly believe that the next 2 quarters we will see a pickup in growth. And one of the reasons for the pickup in the growth will be also, or one of the reasons why RBI first of all reduced the growth target is because we had 1 weak quarter. Now, if you have a year where the targets where the numbers are based on 4 quarterly figures or 4 quarterly numbers, and one of those numbers tends to be low, which is now a fact, we know it is low, then automatically the target for the whole year gets adjusted. Having said that, we must bear in mind that the 3rd and 4th quarters of last year were relatively weak because these were the quarters immediately after demonetization, which had a temporary slowdown in growth at that point of time. That has picked up significantly since then. I think demonetization is behind us. But having said that, when we come to the 3rd and 4th quarters of the current year, we'll be comparing these numbers with the previous year where the numbers were low. So automatically the numbers will start reflecting a much healthier picture going forward than what they were in the first quarter.
Okay. There's a note which said that RERA would act as a spoiler for the near term. How long will this near term last if there is a big impact in the first place?
All right. So I don't think I can get into numbers because we are close to we are not close. We have actually the quarter is over. So we can't get into numbers. But having said that, anything that is done, anything that is good which is done for the economy, anything which is good which is done to shake up the system and make it more robust in the long term will have a short-term negative impact. We saw that with demonetization. My personal view is that demonetization has brought in huge benefits. The benefits are in the form of the fact that the income tax department now has access to information about a whole lot of people who in the past were never paying taxes and suddenly found a lot of cash which they were able to deposit into their bank accounts. So the tax department can now get these people on board, which can then improve the tax to GDP ratio. We have seen that the other benefit of demonetization has been the fact that people have converted their cash into financial assets, and those financial assets are now finding their way into mutual funds, into equity markets, into bond markets. So it's moving into those. So liquid cash, what used to hitherto be liquid cash, has now moved into the financial markets, which is benefiting the entire system. So the point I'm making is that anything which you do which is good for the system in the long term will have a short-term negative impact. Now, RERA on its part has a short-term slowdown because of the fact that that the process of registering projects is taking more time than what probably was envisaged earlier. RERA is a state subject, so in different states there are different authorities, different speed at which the RERA registration is being carried out. But believe me, this is a short-term impact. I don't see growth getting impacted. Again, I don't want to get into numbers, but I don't see growth getting impacted in any significant manner, whether it is for the second quarter, third quarter, or fourth quarter.
But would it improve post-quarter?
In my view, this registration process, the registration process should be streamlined over the next quarter or so.
Okay, but will this impact that RERA has caused die down in a hurry? Can you predict the quarters, Mr. Mistry?
I think it will die down. I can't get into months on when it will happen. It's very difficult to put this, but the next couple of months, 2 months, 3 months maximum, I would think things should come back to normalcy. And it's not as if there's that major an impact on demand. I mean, when you see numbers, you will see for yourself. It's not that major an impact.
Okay, a chat with developers suggests that the key segment which is likely to do well is low-income housing or affordable housing. Is that margin accretive enough for companies such as HDFC?
I think there is growth happening across the economy, whether it is in the affordable housing segment or whether it is in the middle income segment. But yes, the affordable segment, affordable housing segment, or the low income segment, as you put it, affords huge opportunities, and definitely it's something we would like to capitalize on or start looking at. And as far as margins are concerned, as far as spreads are concerned, we managed our spreads very well over this last couple of decades. And my sense is that spreads will continue to remain in the band in which they've always been, which is between 2.20 and 2.35. So I would expect that the spreads would remain stable, and I expect that the growth in the low income segment or the affordable housing segment, the potential for growth is enormous.
Okay, you have maintained that while you've created multiple businesses in the last few years where unlocking will happen, you're actively looking at new business opportunities that will bring in value over the next few years. Can you elaborate on this?
Well, there are different things we have to look at. Everything is currently in the drawing board, so I don't think I can comment specifically on any progress that has taken place on any particular new venture we would look at. But we can look at things like distressed asset fund. And when I talk of distressed asset, I'm not talking of distressed steel plant or a cement plant or stuff like that, but specifically related to real estate. Or we could look at something like an alternate investment structure, an AIF structure, or we could look at a REIT structure. So there are different things that we can look at, and we are looking at, and we are examining these different options. Health insurance is another option we can look at. But these are things which will evolve over a period of time. So it's not as if you're going to see 3 businesses or 4 businesses being set up in the next 3 months or 6 months. These things take time. But yes, we have created a lot of value in our existing subsidiaries. These subsidiaries are now ripe. They're all ready for, our mature businesses. And now it is time to create value in terms of creating something for the future.
All right, Mr. Mistry, we'll leave it at that. Thanks so much for taking the time out and joining us on BloombergQuint.